Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you gotta get spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. So, big day today. We've got that CPI, possibly the biggest trading day of the month. And if this CPI comes in hot, which the street is kind of betting that it will, it could be a real problem for the markets going forward. Although, it's going to be the most interesting thing we're going to see here is how the NASDAQ reacts to this, right? Because, you know, those higher interest rates really weigh on tech and growth stocks, but they've kind of decided that the Magnificent Seven are not growth stocks and are immune to those effects. So we'll see what happens. Those stocks are kind of down overnight, by the way, too. So let's just come in real quick and look at the charts. We've got about 5 minutes until the news. If I can find my chart here, where is it? That's a little weird. Let's see here. It's not that one. It's not. Oh, there it is. All right. So here you can see ZN kind of just ranging around the past 2 days, but at the higher end of the range. A little bit of sell hedging yesterday, but nothing too significant. And I think our call on yesterday was pretty darn good. but it was an easy call. They would be tight yesterday. Here's the S&P 500. So you can kind of see they started out okay yesterday, but I don't know. That move up seemed a little too crazy to me and maybe too good to be true. And you can see it did fall down. And now we are down further overnight. NASDAQ is down 6 spots. What is it right now? NQ down 0.45. Okay, so they recovered a little bit of the downside. Oil on the upside. You think that they can get to $80 again? I don't know that. So there'd be a little bit of a tough pull, but seems like things have shifted a little bit more positive for oil. Gold and silver are actually bouncing here a little bit. That's interesting. So gold bouncing more than the treasuries. Maybe some geopolitical flight to safety movement there. And then here you've got copper. Copper had a pretty okay day yesterday, but this is still copper just overall just still really struggling. China really struggling. And then we got the dollar dropping below 104 here, and Bitcoin. So they had a pretty good little run. I think that there were some shorts getting stopped out on this run. And it looks like overnight Bitcoin was able to recover and hold 50K. So maybe the bull is on in Bitcoin now. Now we see how much the ETF flows boost them. So that's where we're at. And again, we're about to have CPI. Oh, hold on. I need to refresh my news squawk and all of that sort of stuff. Okay, so US CPI month over month, the headline expectation is for spot 2 versus a previous reading of spot 3. And again, I think there's a good chance that we get more of a spot 3 over there. But the key one will be the US core CPI month over month expectation spot 3, previous reading spot 3. If that's a spot 4, then look out, okay? I'm not going to be trading this initial thing, at least not live. I will try and focus in here with some sim trades here. Try to really focus on this. We've got about a minute and a half to go. 30 seconds. All right. There we go. Okay, that is really wild. Spot 4, spot 4. It's spot 4. That was a particularly wild release. Wowzer. Well, I'm killing that one so far. Good grief. Ooh, boy. Okay, so now we're in the scenario I was talking about yesterday, where momentum could start to pile on and really push this thing down. So I was able to give myself a lot of room there. I kept 2 contracts. Oh, that was a good spot to maybe unload one, actually. Okay, I'll take one right there. Because this is going to be so volatile, right? There is going to be a big bounce here at some point. So I think I only want to let one contract ride. I'm looking over here in the micro treasuries, man, and like, I don't know if I could be trading that right now if I wanted to. But look at the liquidity on the inside is practically non-existent until you get like 10, 15 ticks up. Wowzer, wowzer, wowzer. Okay, so the number was spot 4 versus spot 3 again, and the headline CPI was spot 3 versus the expected spot 2. So both of those numbers came in higher than expected, and right about where I kind of thought that they would, and where the street was kind of. This is ugly, guys. I think that this particular move is going to be a really useful one for us to watch, because it's like the culmination of all of these kinds of different things that we've been looking at, right? So it's like a really bad news headline right at a key momentum level. We'll see how bad it ends up being. And I tell you what, I don't think I have ever seen a CPI, at least, that was so violent on the initial release. It did actually spike up about, oh man, like it's like we were started at 26, right? We started at 26. There was some orders that went as high as 07. Can you believe that? So that's 14 plus, let's see here, 4, 6. That's like, it was like 20 ticks up. Did 20 ticks up first before selling off. And then look, I got 09 half. That was just insane. I mean, even if we had correctly predicted that it was going to be a sell and tried to hold something into the news, you probably would have gotten stopped out. That was just so wild. And even after me taking pretty decent amount of profits too, it's not, doesn't get my cost basis even above the open, which is a little, I think it's okay, but it's not optimal for me, you know? Did the data drop so hard while I was like, let me check up on the stream, it's been a while? Reset my whole brain back to default settings. So it's good to see you again, Minek. A lot of commentators are looking for a drop of 20% this year. Yes, you're correct. There was, I think, like both Goldman and JP Morgan had said in one way or another like 20% decline. Now, where are they getting 20%? They're kind of saying that the stock market looks like it is in a bubble, and that when you have this kind of weak breadth, because it's like 7 stocks are like all the gains and everything else is down, right? Usually when you have a breakdown like that, it comes back about 20%. So that's where they're getting that. I'm doing okay. I had a really, really great run. And then in January, I just didn't have it, man. And, you know, I tried to reduce my risk. I think I did better than I have in the past on kind of situations like this, but it wasn't quite enough, and I took deeper losses than I wanted to. So I feel like I'm still kind of in recovery mode. On these sim trades, man, when I'm trading like 2 or 3 contracts on sim, and I do it in the main instrument, I think one of the problems that I'm starting to run into is that the sorts of events that I seem to be hitting the best on, the liquidity is just not there in the micros to do it. But when I come up here on the ZN, I've just been killing it lately. So I guess it's kind of mixed. And then I got a Series 3, where I passed the Series 3 test, rather. So I haven't gone about like setting up a firm or anything. It's kind of a rough thing because it's like, okay, so I go and I register it, and then I go and I try and find clients, or do I do the other way? I go and I find some people that have hedging needs, and then set something up. I don't know. I'm still kind of debating it in my head. And we're trying to work towards like running a fund, so we got lots of good stuff going on. And I think this weekend I should finally have the time to like get some more serious things. I've got to finish the freaking table. That's the big one. Make a name for yourself by trading and then market that. Most funds start by trading their own money as well. So I don't know if that's actually true, AO. To be honest with you. I actually think that most quote-unquote funds start out not really having a record at all. I think that most funds are started by people at a bank or, you know, someplace like that with a new idea for a strategy, and they backtest it and do all of the work on it and then market it to people, and they kind of already have the apparatus set up to start them. I mean, I don't have any kind of like data or statistics on that. That's just kind of what I've seen. But maybe what I've seen is focused too much on the most successful people in the space, you know? Okay, so getting a pretty decent pull back here. Okay, so they did breach, and I suppose you could say find support at the 200-day moving average in ZN. So the next big like spot, maybe something interesting at 20.5 might be another small step lower that they could maybe reach. And then below that, it's really like, whoa, okay, that's a real cliff. Well, okay, let me go back. Okay. Let me try presenting what I was trying to say from a different perspective. Okay. The funds that I've seen that are successful were not based on day trading. Right. Negative 10K delta at 250. Ooh, yeah, you're right. There was a lot of volume kind of changed hands in that area. So I think that there were some profit taking and kind of like liquidity whole kind of behavior. The overall drop was 30,000 contracts, which is a lot, but you could probably still get another 20 to 30,000 net this session potentially. It wouldn't surprise me. It wouldn't surprise me to see that as the low of the day, but I'm not going to be betting on it. And I also think that we could see like a lot more downside. And I don't mean like more downside today, but like over the course of the week. So I think that once again, I want to hang on to this. Let's see. Did you trade? I sim traded through CPI. Doesn't really count. You know, I was yesterday I was feeling a little bored, so I was trying to get some games going, something to just kind of that I could kind of like work towards. You know what I mean? I always gotta have something that, you know, I feel is worthwhile to work towards and try and achieve. And like, yeah, I have my bigger goals, but a lot of those are like big things and take years to accomplish, and you kind of need like little things just to keep the chemicals going, you know what I mean? And so I can find games to be useful for that, although you got to be really careful about the kind of game. Like I very much actively avoid any kind of game that I feel like you have to grind, right? Like I feel like that the game should just reward you for playing the game and enjoying the game. And if I have to go and do something that feels like work to progress in the game, that's no. Especially like the online games where they really make you grind. I hate that stuff. I hated when Farmville, that way back in the day, like Farmville was pretty cool at first, but then like as it got along, it just got more and more grindy, and they introduced more and more ridiculous stuff, right? Actively avoid those sorts of things. Well, my thing has always been shooters, and there's not really a very good shooter out there right now. So I was like, well, we just got to keep up with like our skills. So I was looking at things that were good, like aim trainer games and things like that. And, you know, so I was trying to get some suggestions on YouTube and watching videos on YouTube. And I was watching this one guy that was talking about, you know, how do you actually get good at it? And one of the things that he said was that focus is super, super important. Like as you're going and you're trying to hit these things, if you just kind of do it, you know, absent-mindedly and disconnect, that it doesn't have as much of a benefit, because what happens is when you focus, the focus releases acetylcholine, and that acetylcholine goes to the cells that, you know, have to like grow and develop in order to make you better at that skill. And then when you go to sleep, those are the cells that like develop and grow and whatnot. So I looked back at that and I was like, oh, okay, that makes a lot of sense. And I do think one of the problems, probably not the main problem, but one of the problems that I think I had that kind of led to me messing up in January was that I was not keyed in enough, you know? I was kind of like, would tune out of the markets and then only come into it when I really felt like it mattered. And I think that when I do that you kind of lose your touch, you know? So today, I'm trying to focus on that. I don't think that means that I need to be like super hyper focused on the market all the time, because when you do that, it just makes you want to take trades, right? And bad trades usually, right? So I gotta find a balance, but when I'm in it, I really think that I've got to really focus in on what am I looking at here, right? We've gotten this is a pretty decent pullback, all things considered here. What is that, like 12 ticks? But I'm not seeing anything like super wild in the volumes or anything. Cumulative delta is actually flat through here. There was definitely some spots. So there's the bottom of this value area at 25, I think kind of sticks out to me a little bit. And then this point of control. So there was some points where there was some volume and there was some imbalances in the volume. But overall, it looks like we are kind of in a liquidity hole, and they're probably still selling, but just very, very gently, and all of the volumes are kind of evening themselves out. So the issue with that one is that it doesn't really give us a very good spot. I think that I could probably justify selling anywhere above 27, but there's still a chance that we get sucked back up and go like 0.4 is where my seller cost basis is, for instance. So that's a price that's where it is right now. But that's a line that we may revisit at some point. Yeah, good choice. Avoid the grinding games. Half of your time grinding and working towards nothing like extra farmhouse. Yeah, I mean that's what all of the MMO games turned into, right? Like World of Warcraft and so forth, is just grind. And I think that those are objectively bad for you. They're basically commandeering that the reward centers in your mind and driving it towards something that benefits the game developer and doesn't benefit you in any way whatsoever. You know, like I think there's a reward in getting better at a game, right? But when the game mechanics, when there's like no actual mechanical skill to it, you know, that's stupid. I think that that's a large factor behind why MMO games died off so much, was that the audience got sick of it. But I think the other thing that contributed to it was that the audience that was prone to that sort of a thing, they just went to mobile gaming, I think is the other thing. So why no UB? So mostly just because I don't have the space. So, I mean, it's a difficult thing because there's all sorts of stuff that you can put up that has data. And I think the case is that there is more information that would be, there is more data that would be useful to our trading out there than we have the screen space or attention to be able to handle. So we kind of have to pick and choose. I think that ZB gives us a very good picture of what's going on the longer end of the yield curve. I don't think that UB really provides too much that you don't see in the CB, so I don't put it up there. If you have the screen space, you know, like you got all your DOMs set up, the default DOMs are pretty small. You say, oh, I've got plenty of room. Yeah, go ahead, put ZB up. I would probably put ZT, the 2-year up before I put ZB. There can be significant things that happen in ZT that we miss sometimes. But again, you can kind of see it in the 5 years, so I think it's enough for me to understand at least what I want to understand, which is what's happening with the yield curve, which, by the way, you can see is flattened considerably, right? I have just one goal: make enough money to be able to say F off to everyone. Oh, you want FU money? Well, if you want FU money, I think that you've kind of got to... How do I put it? Trading is an activity, day trading in particular is an activity that you do after you have FU money. Or maybe not FU money, but considerable amount, right? These are all things that, like, if you have a lot of capital, there are some like really big upsides to them, right? But if you don't have the capital, it just, even if you're super amazing, you just kind of tread water. UB overreacts, so just watch ZBZ and UB and ZF. Might throw up an index. Well, I would definitely watch the index. So the things that I find the most useful, so I have this synthetic dollar index, you know, and I think that's kind of the best way to take it, which, by the way, moved up. So it's in line with what we'd expect, right? Higher yields, that's good for the dollar, brings more people over to the currency. So you see the dollar move up. If I don't have the synthetic dollar index, which is a part of my indicator package, is speculatorseth.com, you can, you know, just put the individual currencies up. The correlation between the treasuries and the Japanese yen is insanely strong. And I think that it's incredibly useful to have a chart of the Japanese yen up somewhere to be able to see when it's the yen that's moving. Because this used to happen to me all the time, and it was the source of some of my biggest losses. Would be, I would see the treasuries pressuring like the low of the day or something like that, right? And then it gets down there, and I'm thinking it's going to go, and it just absorbs and absorbs and absorbs and absorbs, and they're not able, the sellers aren't really able to hit it very hard, and so eventually it reverses, right? And so then you get down there again, and you're like, oh, it's like the same thing. It's going to do the same thing. But then this time, it just falls through. And it, like, you know, there's a real breakout to the downside on hardly any volume. So how is it that before there was all these people that wanted to sell, and there's these huge icebergs sitting there waiting to catch them, and now this time around, the icebergs aren't there, but they're able to just plow through things on like hardly any volume? What's with that? The bids just pull. It doesn't make any sense to me, right? Well, what I started to discover was that when the market was doing that, it was usually because of a correlation. It was usually because there was volume, but the volume was in a different instrument, and the treasury was just going along with it. And when that happens, a lot of these market-making robots, they're looking at correlations. So they say, oh, well, the Japanese yen just moved down, so I need to adjust my bid. And that's how you end up seeing it make these like critical moves on like no volume. So if you have the Japanese yen up, you can kind of look at it and say, okay, the correlation between the yen and the treasury looks really high, and I can kind of see how the yen is moving and the treasury is just following it. And I might even be able to find, you know, like the news headline that's driving it or something like that, right? Once I did that, things made a lot more sense, right? Once you can kind of separate out what is causing the flows makes it a lot easier to understand why things turned out the way that they did. So I really, really highly recommend having a chart of the Japanese yen up somewhere. And I would recommend having a chart of the S&P 500 futures. That one has not been so critical in the post-COVID era. But I can remember before that, some of my best trades were, I could kind of see a whiff of weakness in the S&P 500. And then they came over and bought the treasuries like mad first and then turned around and dumped the ES, for instance. So it will come back. Eventually, we will have like more of like a real normal recession, and that equity treasury correlation will kind of be more important. They're trading U.S. Treasury futures, correct? Yes. So I got the 30-year, the 10-year, and the 5-year, the regular Treasury futures, and then I also have the micro Treasury yield futures down at the bottom. By the way, the 30-year not really getting a whole lot of liquidity at the moment. Somebody needs to come in and find the best offer and start bringing the offer down. There it is, 4.5. Oh, maybe you don't want to bring in the best offer. I don't know. 4.5 seems like too much. But 4.331 is kind of odd too. So we've actually got like a real aberration in the, well, it's not an aberration. There's always kind of a hump at the 10-year, but apparently the hump is like really prominent right now. So something that happens is that the robots that put up the liquidity in the micro treasury yield futures, if the spread is already larger than like 10 ticks, because their edge is basically like 10 ticks. So if the spread is like wider than that, then they don't want to put liquidity up. So what you have to do is you go and you put a contract out there. I think that this one's a little too risky for me to do. Otherwise, I would show you when I would do it. But you kind of got to figure out. Also, the problem is I'm not quite sure which side is correct. I think that, yields going higher, that you start with the bid. You put it at like 4.332, and then you just slowly move your bid up until you get filled or the yield comes in. And then the robots will show back up because the 30-year is not behaving like normal. I've actually gotten away with, so there was one time where I did that and I got filled at a price that I was like really surprised that I would be filled at. And so I just went in and offered right below the best offer, and I got filled on that too and made like a quick $30. I think it only worked out that way once though. And I think that I've probably lost just as much doing that. But I mean, somebody's got to do it, or it's just going to stay untradeable over there in the 30-year. This is where making an estimate of ZB, like what is the actual yield, theoretical yield on ZB, relatively speaking. It's kind of tough. It's kind of tough to go, okay, here's where the ZB is at. What is the actual price? Like, you can do it, but the price that you get isn't very accurate. Just shows how little retail participation there is in financials. I think so. Like, well, the thing is the retail traders only want to participate in the 10-year. And if they're going to spread, they're just doing 2 and 10. So you do see some activity in the 2. That is another thing that I think I kind of want to fix eventually, but yeah, I don't know. I think I want to make something that's like, okay, based on my momentum. So my understanding is that there's a decent momentum in the yield curve. So if I could make something that's like, okay, this is the direction that I think the yield curve is going, then I use that to determine whether I'm bidding or offering in the 2-year. And then if I happen to get filled, and maybe I do it with a robot, robot that just tries to bring in the spread just a little bit. And if I get filled, then I immediately market order in on the other side in the 10-year. I want to do something. I want to try something like that. Like I want to do something that increases the liquidity in these instruments, because I believe that in a few years, when these things become really liquid, they will be extremely useful and important instruments. Well, they just kind of went from the higher end of the range to starting to look a little tipsy, like that they want to plummet all the way down. I think that it's probably still a little bit too early, but you never know. In a situation like this, they may not want to wait. I think those sellers... So we actually have seen an additional 20,000 contracts or so worth of selling through this. So if the sellers are getting the liquidity that they need in this area, I don't see why they would want to push down to the lows of the day. You never know. Like, you can see crazy stuff on days like this, but I think that we're probably likely to continue in this area for the next 15 minutes, if not all the way until the S&P 500 open. Oh, dude, all the new traders want to trade as super thin, fast-moving markets. I doubt liquidity is going to get better personally. Nah, well, the liquidity in the micro 10-year has gotten better, though. Part of it is just convincing, like, you go to somebody like Goldman or whatever, and you're like, hey, you guys should put liquidity up in this instrument. I mean, you will make a little bit of money. They're like, okay, fine, we'll do it, right? Part of it is just that, but they've gotten better over time. Except for the 5-year. The 5-year has just been like, oh. So I suppose they might someday get rid of the 5-year, but I think it would be a problem if they got rid of the 30. Oh, that kind of makes me think back to during the Trump administration, when they were talking about a 50-year bond, and I kept being like, yes, please, mostly because I was like, hey, that'd be like a wild instrument to trade. Like, that'd be so cool, right? But it would have been a really good way to fund the government at exceptionally cheap interest rates. And they didn't do it. They didn't want to do it. Well, I think that was a big missed opportunity. That sort of thing always makes me think about that. Okay, so now that it's the top of the hour, I think that this would be a good time to try and read synopsises of the CPI print. Yeah, it would be like 62.50 per tick for a 50-year. It'd be wild. Or like maybe they price it in 16ths instead of 30 seconds. It would be an interesting thing, wouldn't it? Okay, let's read. Expectations were for a big drop in the year-over-year consumer price, but instead it surprised to the upside with a 3.1% print for headline CPI. Consumer prices rose spot 3% month over month, but the headline did decline from 3.4 to 3.1 year over year. Core CPI fell below 4% year over year for the first time since May of 2021, but the 3.86% year over year print was higher. I think that they meant to say higher than the 3.7% expectation. The index for all items less food and energy rose spot 4%. Shelter increased spot 6 in January and was the largest factor in the monthly increase in the index for all items less food and energy. Which, by the way, Zero Hedge themselves has been. They're not going to crow about this one. It's so funny because I'm always criticizing them for crowing about things that they really shouldn't. But they warned us a good 6 to 9 months ago that those measures of housing were kind of shifting and that they were starting to move back up again. So that makes sense. But it's interesting to me that it was the largest factor in the increase. So that makes me wonder if the increase is as big of a deal as I think it is. I think it's still a pretty big deal, but it might not be. Like, I'm kind of like sitting here thinking like, this is the end of this market. Like, we're just going to be all down from here the rest of the year. That might not actually be the case. Lodging away from home increased 1.8%. Motor vehicle insurance increased 1.4%. Recreation rose spot 5%. Other indexes that rose in January were communication, personal care, airline fares, and education. Medical care rose spot 5. Hospital services increased 1.6. Prescription drugs fell spot 8. Oh, that was because of me. I switched my medication, and that changed the prescription drug index. The index for used cars and trucks fell 3.4%. The index for new vehicles was unchanged in January. The apparel index also decreased, falling spot 7%. Core service inflation picked up month over month and accelerated year over year. Food and energy services costs jumped month over month along with transportation services. Okay, so it really is kind of like an across-the-board increase in some of the most important factors. Supercore, which is core CPI X shelter, soared spot 7% month over month, the biggest jump since September of 2022. Wow. Let me show you the picture of that one. That's Supercore. That's not very good. And driving the year-over-year change up to 4.4%. And finally, as a reminder, lower inflation does not mean lower prices, of course. The actual index of dude, the number of people online that don't understand that is like insane. But it's because like Joe Biden has been saying stuff like making that mistake. So it's kind of funny. The actual index of consumer prices hit a new record high this month and is up over 18% since Biden's term began. And it gets worse. The reacceleration of inflation means wage growth is back in the red relative to prices. You still don't know how to glean anything from CPI? Well, so I think there's kind of two parts. The first is like, what are the actual numbers that we got? And number two is, what do we actually already know about the future? Because especially when it comes to inflation, we actually have a pretty good look into like what the CPI is likely to be over the next 6 months. Like, there's certain components that we kind of know, okay, this is kind of going this way and this is kind of going this way. And then, that's why like a beat or a miss is usually only 0.1%, right? So we kind of knew that the things were starting to show inflation coming back, but you're still kind of like debating around the edges. Then the number comes out and the number is worse than the analysts expected. So that is a huge stumbling block for the market. This is not a trade that I can make, but I think that a trade that I would like to make is to be short either treasuries or equities for a small swing trade short. I think that this sell that we're seeing here today will probably persist for a couple of days. The following days might not be, might be relatively small, but I think that you're going to continue to see some selling flows here off of this. This is because that's a pretty big jolt, pretty big shift in the overall dynamic of the market and current momentum and all of that. It's 50-50 if that means anything, but there's been a lot of sell volume just gobbled up on the bid down. Well, yeah, because I think that what's happening there is these systematic strategies. They come back over to here. You know what? I need to fix something on this. If I just change these to on price change so that you can see like the current bar's actual values. Okay. So now you can very clearly see that the daily bar, the wick, is below the 200-day moving average. And now we're only like a tick or two above that, right? So I think that what happened was, there was probably some momentum strategies and so forth, or mean reversion strategies that were maybe short from up in here. And when they get to the 200-day moving average, they're going to take profits. So I suspect that's why you are seeing some support down there. That's why I was kind of saying, like, well, I'm not going to say that they can't go further, but there is some support down in here for sure. Now, the other side of that, though, the other side of that is, man, look at the freaking chart. Look at the 1 minute chart, right? They continue to sell through this. Like, the market orders are still net short. And we didn't really pull back all that much, right? And this looks like something that is likely to just kind of settle in this area. So, like, when you get, like, a really clear L like that, L is for loser. What it means is that 200-day moving average becomes a really great place to take profits, but not so great of a place to, like, initiate a mean reversion, buy against the flow trade, I don't think. Be a little bit nervous buying it down here. But who knows? Maybe tomorrow. I can't tell you how many times when I've come in and I've said things like I've said today, that this is like a really big deal and all of that. And then before the end of the day or the next day, they completely retrace that move. That's happened so many times in this market. The Senate is going to pass the giant spending bill, are they? So the Speaker of the House has been living up to his promises, I'd say. Like Mitch McConnell, I'm still really wonder about that thing, because Mitch sounds mad that everybody poo-pooed on his immigration bill, which is just like wild to me. Everybody's trying to. So I saw one person on Reddit. I tell you what, there's this one subreddit called Mark My Words, where people just say the craziest things. and one of them was, mark my words, Trump turning down this immigration bill will end him. No. If he had supported that immigration bill, it would have been the end of his support. No joke. It was such a terrible bill. It's just mind-boggling to me, all of these people in the establishment that thought that it had a chance and that are upset about it, because I'm looking at it and I'm like, this isn't actually a serious bill. They're just playing games. McConnell is just playing games. And a lot of people have hypothesized that McConnell intentionally put together a bad deal that he knew would get rejected. It wasn't Donald Trump that shot it down. It was the Republican base hated it because it was a terrible, terrible deal. Relative to what Republicans want, it was basically they didn't really actually get anything. It was the border still wouldn't be defended, essentially. We'd still have massive amounts of illegal immigration. Okay, so now we come over to the debt. and I'm kind of getting like this similar thing that like that the Senate wants to get things through. So for instance, the Senate passed on a 60 vote over a 60% threshold to fund Ukraine, right? And the Speaker of the House immediately turned it down. There's going to be a Trump vote. Well, it's already been happening, dude. That one, it was when somebody showed me the chart of that, I was quite surprised. So I do see a lot of supposed correlations in the markets these days that I'm a little bit like, I don't know about that one. But the Trump one, it does seem to me that the S&P 500 is rising as Donald Trump's chances of winning the election go up, and vice versa. There is somebody like actively trading that. Just kind of interesting, but it's just that I don't think that the information that we're getting right now about how likely he is to win or lose isn't very accurate, but I digress. That the Speaker of the House, you know, and the thing with the Ukraine funding is that I don't think that most Republicans are really that opposed to giving Ukraine more funding. It's just that they want to get something in return. And that's the thing that I think is so wild. Like, the way that it gets presented in the media is just the exact opposite of what I think you should be looking at if you're a political watcher, okay? The Democrats want to increase spending and you know, keep illegal immigration coming through and everything else that they've got going on right now so badly that they're willing to put Ukraine funding at risk for it. That's the real takeaway there, right? Is that they're willing to risk Ukraine losing the war in order to prevent Republicans from getting any of the things that they want. Isn't that wild? Because I would have thought that would be an easy trade. It would be an easy trade. Like, just shut the border down in exchange for Ukraine funding. Easy. They can't do that. It's wild. So I don't know about this giant spending bill, but I don't think that the Speaker of the House is just going to roll over. Yeah, there's been a couple of points where like all of the skeptics on him were like, oh, see, look, he's an establishment chill too, etc., etc., etc. But then he held the line. So Congress just trying to create demand for dollars. Yeah, it is. You know, it's an interesting dynamic. I don't think that it's happening as much in the United States, but in Canada, they're really starting to realize, like, dude, the amount of immigration that we're having coming in is really affecting the price of housing. So, like, people are starting to figure it out. This was I was talking about yesterday a little bit, right? Even though we were joking around about other things, but the immigration issue is getting to the point now where the vulnerabilities that it makes among the Democrats' existing constituents kind of makes them think twice. Like, yes, they benefit from more future voters, potentially, but it's hurting them enough among regular voters that they're starting to kind of think things twice. Yeah, we've reached the volunteer to take in migrants stage here. Soon it will be cut. No way. Oh man, if there's a situation where people are forced to take in migrants, that'll really be wild, right? Because that is like that would be like a big Supreme Court issue, right? Eminent domain. Well, man, I don't know, man. eminent no domain can definitely be abused, but I don't think that the courts would allow it in a situation like that. Yeah, a German lady who works for me years ago told me that when Europe's migration problem started, well, I can totally believe the Europeans doing it because they don't have any rights over there. This is something that I remember arguing about with people online in high school all the time. It's not as much of a thing anymore. I mean, it's still a little bit of a thing, but it's not as much of a thing. When I was a kid, it was always like, well, Europe's so great about this and Europe's so great about this. And I'm like, yeah, okay, go down there and actually like, go on vacation and see how freaking expensive everything is though. And like the quality of living there for the most part isn't there. I would say there are some parts of Europe where the cities are better than the US, but overall the standard of living is less. And the one in particular that I always kind of stood up for was they don't actually have rights in Europe, right? What they're doing is they're looking at the US and they say, oh, all of these things worked in the US and people like them. So what we'll do is we'll pretend to give them, our people, those things, but they don't actually give the people those rights. And so then, sure enough, as soon as it becomes inconvenient for the people in power, they take those rights away and you don't have freedom of speech in Europe anymore, right? But the reality is you never had freedom of speech. It's just that they weren't actually, utilizing it against you at the time. There are some cities particularly in more Eastern Europe where like the city itself is actually really nice. So like cities that I would rather live in than like Chicago, right? So yeah, and I don't know how mandatory it's become. But did you see this story? So there was a story about this yesterday. There's a story, I think it was a couple in Boston. And they were like, oh, we have extra room in our house. We could house a migrant or a migrant family or something like that. So they go and they apply online to do it. And they're sent a family of 4 before the end of the day. Can you believe that? Like, that's so crazy. Hey, if you're not in the areas that are being affected, we're so ignorant right now. There's so many people coming over, and it is really affecting the people in those areas. It's wild. It's wild stuff. Yeah, I'm just going to completely clear the DOM here. Because I want to track better how much they're retracing. Want to move to Denmark and become a mysterious trading prodigy? I mean, word on the street is Netherlands is the place, man, if you want to do that. If Gen Z doesn't have any more kids, someone has to work for our retirement funds. You know what? I'm actually not so concerned about that, Rodrigo. The machines will do the work. It's all robots. This was on Reddit the other day, and I was commenting on this, but I just think it's the most interesting thing to think about. Is like, okay, if things are determined by supply and demand, right? The more that supply goes up, the more that prices go down, right? So if labor supply increases exponentially because of the introduction of artificial intelligence, then prices approach zero. Like, it's really insane that like some of the basic rules of economics, I think, like supply and demand, I think still apply. But it's such a different world that you'd have to take a completely different approach to it, right? Because in a world where all of this labor is done by robots, everything is just dirt cheap at that point. The only thing that at that point, assuming that we had like, let's just assume for the sake of argument, like this is like the most extreme form of AI. Like we have general artificial intelligence that can do like almost anything now. Okay. The only thing that would kind of like create prices now at that point is the cost of materials, right? If labor is no longer a factor in the cost of goods, there are a lot of things that will just be incredibly dirt cheap. And one of the things that I think would be incredibly dirt cheap would probably be homes. Imagine being able to pay for your home with only a year's worth of labor, right? At that point, the issue is not like all this universal basic income stuff. I think that's really dumb because at that point, I think that the real challenge will be convincing people to work in the first place because people just won't have to. They'll work for a few years and pay their house off and then like, you know, just do contract work here and there. They'll retire earlier. They won't work as much. I doubt AI is going to take off in the next decade. People said we would have flying cars. Yeah, I agree too. I do not believe that AI will like significant, like permanently, let's say permanently impact the number of jobs in the labor market. You know, we're talking like maybe 20 years in the future because what ChatGPT can do right now is really limited. Like this idea that it's going to replace all white collar jobs is a little ridiculous, right? Yeah, AI can't create land. You're correct. So this is saying the only cost at that point is materials. And I get land. Maybe we can consider that a different category, but I think of it as you know, resources, right? If you go and you buy something, the value of that something right now, of a significant portion of it is in the labor that it takes to make that thing. Like clothes in particular, that's like a good example. But like labor is like the largest cost. If the cost of things is only the cost of materials, there are a lot of things that are just like so incredibly dirt cheap. It's mind-boggling. People said software would replace accounting. The way I see it, most likely we'll have driverless cars within 20 years. I think so, yes. I am concerned that a future is coming where you won't be allowed to drive a car. Or that you'll only be able to drive a car recreationally. I don't know if that would mean that the value of land would increase necessarily. So the value of land would increase if demand for land increased. Yes. So if houses being dirt cheap resulted in an increased demand for housing, which it potentially could, but I think that the increase that you would see would be more on orders of like 10 to 20%, not like, you know, I don't think that it would make them like insanely more valuable. Okay. But just go and look at the value of land in your area right now. Just for this, you know, let's do this. Okay. Let's come over here. We'll test this out. Let's go to Zillow. And I'm going to say Salt Lake City. And I'm going to change this to be only, how do I do it? Ones that don't have a house on them. Home type. There we go. Deselect all and only show me lots. Okay. There's no way they're selling a lot for $5,000. That looks like there's already a house on it. No. Now that's a big spot. 2 acres. Like this one. Oh, that's a terrible lot too. You know what? I need to go back. Hold on. What if can I do it just all in Utah? Draw. Yeah, that's what I want. There we go. Only lots / land. Okay, there you go. So here's one in South Jordan. That's a little bit better. Okay, so it's in a real neighborhood. $114,000, right? So like, right? That's what I was saying, that like, imagine if the cost of a house was only 1 or 2 years' salary. Like, that's the future you're potentially looking at. You could demolish that guy's garage if you bought that one. It was kind of a weird one, wasn't it? I will build a mansion in Spanish Fork then. Dude, my sister lives in Spanish Fork, and it's cheap out there. It is. Then everybody would be no, not necessarily. So I think that there's a lot of land out there. Right, that's kind of the thing. But there's some land is more desirable than other land, right? So land values in desirable locations like inner city areas probably would go up, sure. But it would probably still be cheaper than the cost of a house today. Because sure, land is expensive, but that's only like 25% of the cost usually. You're still talking about like a 50% decrease in the cost of. And then on top of that, you know, high density housing probably too. Often. Another thing is as you build out the internet infrastructure in rural areas, people can work from home, right? So that greatly expands the places that people are willing to live. You're going to grow old, and the only thing that's going to change is some of the things that you take for granted today will have become illegal. And you might get some tech out of that to help you cope with it. Well, I'm almost 40. Is that not considered? That's the kids consider that old, at least. Dude, the teenagers these days, they seem to me to be particularly. I think when I was a kid, yeah, we consider somebody that was 30 old, but we all kind of knew that, you know, 40 was kind of the time where adults feel like that they've peaked. And all of the adults always complained about being over 40, right? I didn't necessarily understand why, but now I do. Like your ability to recover and all of that drastically declines as you approach 40. Okay. But kids these days, they're like, oh, you're 25. That's an old person. What? It was only like 5 years away for you. Come on. You'll see all these kids on TikTok saying things like that. We are in a pretty gentle uptrend at the moment. but it's so slight that, you know, it would only take like 1 or 2 ticks on the downside to just bust that line. So yeah. Now I don't think that we'll ever get I don't think that we'll ever get a world like Ready Player One, where like everybody just lives in a trailer that's stacked on top of each other and stuff like that. No. Over time, what we find is the standard of living improves. And artificial intelligence technology has the potential to make like huge leaps in people's quality of living. Nah, that won't be poverty paths. They'll be nicer than the homes that you live in now. Like really, so again, think about, if you have infinite supply, then how do you like make money on anything, right? Well, I think that there's still some things that they would make money, but like it would be different kinds of things, right? Like I would be willing to pay people to be able to interact with people instead of a robot, right? So there's still going to be jobs like sales and deal making and that sort of stuff. It's just like if you're an investment banker, for instance, right? Then you get to focus a lot more on the part of the job that I think a lot of people go into investment banking for, which is like negotiating with other people and making decisions and things like that, and let the robots do a lot of the writing things for you, right? So it just makes that job easier, right? And it kind of makes, you know, a lot of the demand just ends up going to those kinds of jobs. No, you think we've AI is such a radical shift in the economy. There's going to be insane increases in quality of living from AI. After that, maybe the increases become marginal. But then probably another big technology comes along, right? Because another thing that, you know, is coming along is fusion, right? I know that they say that fusion is always 10 years away, but they've actually done it now. So it really is like 10 years away. 10 years away, I would say in 10 years, we will probably have like an experimental production fusion reactor. In 10 years. We don't have, yes, we do. We don't have general artificial intelligence, but the artificial intelligence that we have today is going to result in pretty drastic productivity increases in certain industries. Nah, I don't think that you'll ever get UBI. So first of all, UBI doesn't actually solve any problems. But when I look at like the way that systems work and things like that, by the time that they're even that they're even getting to putting UBI in, we'll have discovered that we don't need it. No, we haven't. No, I think you misunderstood what I said. We have an experimental fusion reactor now. So we do have experimental fusion reactors, and we have experimental fusion reactors that generate more power than are put into them. Yes. But I'm saying a fusion reaction or a fusion generator that you would actually use to generate power for homes. I'm saying that the first kind of like test bed reactors of that sort will probably be built in 10 years. So it takes a long time to build those sorts of things, right? What we have is that advanced data analytics that can put together a coherent response. Well, it is, that's not intelligence, but it is a part of intelligence. It's a large part of what a lot of people do at their jobs. A lot of what people do at their jobs is they're just taking data and modes of doing things that they've read in the past and then applying it to that particular situation and spitting something new out. Yeah. So I'm saying I think that you would have experimental reactors that generate enough power for commercial usages in 10 years. That's what I'm thinking. And in terms of AI, the next thing that you are going to see in AI is you will see AI where they are able to combine an AI that can actually process logic, that can actually go in and say, okay, if this, then that. Simple types of logic, simple types of math, and then combine that together with ChatGPT to resolve some of the nonsensical responses that it gives you. I don't think in my lifetime that we will get to a point where for a business use case, like if I was in investment banking and I was writing a proposal document, okay, I might go and generate that document with AI, but I guarantee you I'm going to read it afterwards, double check their work, make my own changes to it, etc., 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 right? So I don't think that we will get to the point in our life where you're going to take something that's that important and just completely trust what the AI said. But I don't completely trust what another person would say on a thing like that either, so, right? But it is a productivity increase, right? And probably at the very beginning, I mean, we are seeing a little bit of it right now, to be honest with you, that there are going to be some jobs lost. Ultimately, though, you will probably have more jobs. It's just the jobs will go into something different. Places where the robots don't work, right? That's where I say, like, okay, if we're assuming that you had general artificial intelligence, people are still going to want to talk to a person, right? So there's still going to be jobs where but those jobs are probably going to be more jobs where you're interacting with people. Great fusion breakthrough. How old is? Oh, 4 days ago. There you go. Yeah. There's been a lot of headlines about it recently. Some cool videos too. Okay, well, remember when we were down here, I was like, well, it looks like we're in a gentle uptrend, but it wouldn't take very much to break the line. But the line held. They've bounced back up here. I remember saying that we might revisit that seller's line. We actually crossed that quite some time ago at 110 even. So now that we're above that, I think I could probably justify a buy, but let's just watch it. I think that you might see this sort of thing where the market retraces a major portion of this. In fact, something that happens a lot to me is that they will retrace back to my average position for whatever reason. So that's 110.09 is, I guess, a spot that I need to keep an eye on. Okay, so I missed a comment. The more realistic future is a dystopian one of vast income disparities. This everyone will benefit from AI and robotics stuff is fanciful. Well, so first of all, I mean, that's just more of an indication of your overall view of the world, right? But it probably will result in greater income inequality, which is to say that the quality of life of the poorest people among us and the quality of life of the richest people among us will widen. The people that are really able to scale and take advantage of this new slave labor that is AI, those people will make money and they will have massive amounts of wealth. So there will be a new upper class is what it will be. Like today, you have something like 100 to 300,000 high net wealth individuals, which are like people that have 10 million, 50 million in net worth or more, right? And what you will see is that group of people will become larger. They will probably become better at passing their wealth down, so their kids will be able to like maintain that wealth for generations. And that section of the population, I mean, it might still be like a small percentage of the overall population, but it will grow. I mean, it will be more people, and we'll be starting to talk about that it's millions of people instead of hundreds of thousands, right? And you know, I think that especially for the upper middle class, these things will be very, very, very beneficial for them as well. Okay. People at the bottom of the rung will probably not benefit as much, but it's all relative, right? That's the problem is yeah, we're talking about a Pareto distribution. So I think that in a situation like that, the economy is still a Pareto distribution, that the right tail just becomes even longer. But the people at the bottom, their standard of living will still be higher than it is today. And the kind of jobs that they will be in too will be better. Like today, working class job is like construction, for instance, right? Well, if we are to the point where robots build all of the houses, right? They're not doing those kinds of jobs anymore. So working class jobs now become jobs with day-to-day interactions. Better jobs overall. Hopefully they pay better. But I don't know. I actually kind of think that they'll probably pay about the same, relatively speaking, but it's just that your purchasing power will be so much greater because things will be so cheap, right? So I don't see this dystopia. Like, it just never works out that way. That's the thing, is that every time that we have these kind of huge technological breakthroughs, what happens is, yes, there's a group of people that become rich from it, and income inequality does increase, but the quality of living for people at the very bottom of the rung of the ladder also increases. And I don't see any reason why that wouldn't apply to artificial intelligence. But again, I think at that point, the issue is not like people can't make a living, etc., etc. I think the issue at that point is a lot of people won't have to work. I think that, you know, the kind of person that, you know, makes $200,000 a year right now, like, there's still reasons for them to grind and work year after year and build it up. But in an economy like that, you know, the point where you get to where, like, you have enough money to retire and you can just go and live in the mountains if you wanted to, or where, whatever your dream is, you will get there much faster and it won't take your whole life to do it. So a lot of people will retire earlier. In a situation like that, how do you get people to work? Like it's a real serious, it's going to be a serious problem. And not only that, but like, again, prices are determined largely by supply and demand. Okay. This is an important, very important thing to understand about economy. This is something that I think a lot of left-leaning people don't understand. And it's important to understand in order to understand like what the actual economic debate is going to be in this world. Because the biggest problem that we have in an economy is supply and demand, balancing out the dual forces, supply and demand. And so that's, for instance, what ultimately screws over the Soviet Union, is that when it's all kind of decided by one entity, you don't make enough of the thing, you don't, right? The prices don't go up when demand on something is there, and so you just get shortages of everything everywhere. And then the economy falls apart because nobody can get the thing that they need, right? And so the value of capitalism, the one of the main reasons why our economic system has been so successful is because it puts supply and demand is the supreme principle behind how capital gets distributed. Capital is distributed based on supply and demand, and it's incredibly strong factors. And there's the things that we know about the market and how the market isn't informationally efficient and all of these sorts of things. See, we think, market prices should be fully reflective of all available information. No, they're not. They're only reflective of the current supply and demand. That's it. Not even future supply and demand, just current supply and demand. That's it. Is you trade it, it moves up or down or whatever the thing is, right? That ensures that the resources get to where they need to go. And because that's the biggest problem that you have in a large economy, putting that first is why we're able to be so successful, right? So then you get these people that will say like, well, the actual contribution that a teacher makes to the economy is like super high, yada, yada, yada. We should pay them more. And it's like, well, yes, you might be right. Like this person might be working harder than this person. This person might be contributing more than this person. It's maybe not fair from a certain point of view that they don't get rewarded as much for it. But the economy that we have doesn't reward based on your effort or based on your contribution or anything of that sense. It is 100% supply and demand. If there's too many of you who want to do that job, then it doesn't get paid very well, right? Because if we did this thing where it's like, oh, actually, we're going to pay people based on their contribution. Like teachers, they provide such a tremendous contribution to society. We're going to make sure that all teachers are paid $250,000 a year. Well, guess what? Then everybody would just do that. And you would have an oversupply of teachers, right? So that's why the economy is based on supply and demand, right? But what happens? What happens when you kind of blow that up by introducing infinite labor supply in certain fields, right? That's very disruptive. And now all of the sudden, you do kind of have to start to think about things like, we need people to do this. We need people to do this. This is like an important contribution. We're going to have to start valuing those sorts of things into what we pay people, if only to give them sufficient motivation to actually work, because a lot of them may not have to. You see what I'm saying? It's if you want to talk about a dystopia, It's the mouse paradise dystopia is the problem that we're going to deal with. You've heard about that one, right? Where this guy, they created this mouse society, you know, like they built this habitat that was perfectly designed for mice that could house, you know, hundreds or thousands of mice, like just this big area that was just perfect for mice, right? And gave the mice everything that they needed, all the food that they needed, etc., etc. And when that happened, it just turned into a dystopia. Like the mice would form gangs that would run around and start murdering people for no reason because they were bored and all of this sort of stuff. If there's a dystopia in the future, it's going to be because of that. It's because people are too comfortable. Repeatable too, yes. In the future, like your children's children, I think that is going to be a real problem that they face in the future. I don't think that it's going to change so much in the course of my life over the next like 30 to 40 years, but it will be like on the precipice of that, where, you know, the next 30 to 40 years after me, then that will be a thing. But who knows? Maybe I live to be 120. Man, my throat is just getting worse today, ain't it? So we're back at the bottom end of this range. Are they going to bounce on the line again, or are they kind of done with all that? The S&P 500 hasn't done a whole lot interesting since it opened up either. Some people thrive under pressure while some do their best work in comfy conditions. Will people continue to innovate once we reach a point where there is no need for innovation? I think yes, because it's human nature. Well, okay, so I think that in the theoretical, particularly within the near future, that innovation just becomes an even more valuable commodity. I can foresee a future where a pretty large segment of the economy is people trying to come up with products and putting them out themselves. And you will have all of the 3D printing and manufacturing processes to easily be able to make whatever it is that you want. And so you will see a lot more people kind of like running their own businesses, having a TikTok shop sort of a thing, right? But the products that they will be selling will actually be very much more genuinely there's things that they designed rather than just something that they found on, you know, Alibaba and are reselling or something like that, right? So that is like an innovation economy, right? When all of the labor and all of the menial stuff is done by robots, now you all have the opportunity to just focus your entire time on innovation. I think so. Innovation and interpersonal interactions. It's foolish to think that we are even remotely close to comfort level. We're in the same danger of being wiped out as a comet. Yeah, okay. You think a comet is going to come tomorrow? Yeah, the wild thing about the comet stuff is there was like a couple of years ago, they were like looking at this comet that they thought was going to like make a near Earth pass, and it like passed closer than they thought it was. But then there was another comet that like passed dangerously close to the Earth, and they never even saw it. So like a comet could have hit the Earth today and we would never see it coming. I do wonder about, so you're ever gotten into this stuff about like the Younger Dryas period and all of that sort of stuff? That there is kind of evidence that there was the civilizations well before any time period that we currently think that there was. And those civilizations basically all got wiped out when the glaciers melted, essentially. And a lot of it is probably underwater, and a lot of it just probably got washed away, right? I think about that because if civilization just like died because like let's say disease, for instance, disease killed off the human race, the signs of us being here would still be around for tens of thousands of years. But if there was like a comet, would there be any sign left? I don't know. According to Schwab, the culinary industry will change. Chefs will have to be trained to prepare meals using bugs. I think that people we're far enough ahead of that one. I don't think the bug thing is actually going to happen. But I don't know how wide. I think that's really like there's one or two groups that are involved with the World Economic Forum that are pushing that. I don't actually think that there's really very many people that want the bugs thing to happen, so I wouldn't worry about that one too much. There's that Arctic, so this is something every time that I think about it, I have to look it up on a map. Okay, I know where it is. Actually, hold on. Let me... Dun, 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 dun. So it's over here in I think Finland on like a big island, or maybe it's Iceland. No. Or Greenland. No. No, it's like a little island like way far north. No, I think it's up here. Yes. Yes. Somewhere in here. You know, just in case I'm like one of the last humans alive, I need to know where the archive is. What is it called? Global Archive Collection or something like that. The Arctic World Archive. Arctic World Archive. Yeah, that's right here. Aha, I was correct. Yes. There it is. So remember where that is, just in case you're like one of the last people. Right? That's where you gotta go. I don't know how you get there, but that's where you gotta go. What's interesting, started to build out more volume here at 30, right? Because when we were down in here, this kind of area looked pretty thick on the DOM, but now it looks like just a tiny little blip. By the way, when I took that second contract off, let's see here, do I not have one open? Oh, here it is. Here it is, right here. Okay. Orders. Oh, yeah, we gotta change this to be just today. 631. 01 half. So I took one at 07, 05, and then 01 half. So I definitely could have waited, but you know, I want to know relative to where we are here, how good of an exit was that? I guess it wasn't the best. NYCB not looking good again? Oh, come on, you gotta be kidding me, really? I don't know if that's actually a big deal because probably everything is going on. By the way, I looked up this stock yesterday. I think it was just like it showed up on Wall Street Bets or something like that. And it was like, oh, rare earth minerals? This is pertinent to my interest. So I went and I looked it up and like, holy crap. But yeah, of course, it was a stock that was already like up major time. So you don't necessarily want to buy those, especially in micro, like penny stocks, because usually then what they do is they say, oh, this is a great time to raise more funding, and then they dilute you, right? So be careful buying those kinds of spikes. Okay, NYCB. I mean, yeah, it doesn't look good today, but I'm not going to say it's like a disaster. It looks like it's for the most part going along with the rest of the market. So I don't think that it's to a point where we would be seeing flows in the treasuries or something like that. I'm just going to close that. I was kind of looking around yesterday because I was expanding my spreadsheet and looking at what options I had available to me. Because like right now, I've got like price and PE ratio and stuff. And I'm not actually getting any of the metrics that I think would actually be useful to me in trying to pick a stock portfolio like that. So I'm kind of starting to go down the rabbit hole of like, what are the best services for that? So I thought that Simply Wall Street would do a good job with that. But as far as I can tell, the metrics that they let you put on their watch list is, they have all, when you look at an individual stock, they have all of the metrics that I want to look at. But they don't let you put it on your watch list. So if you have suggestions on a platform or a data platform that has a really good watch list that allows you to really look across a very big collection of like fundamental factors and or export it to Excel or just reference them in Excel, let me know. I guess TradingView is okay with that sort of stuff, but does TradingView actually let you have a watch list? So there is super charts and screeners, an economic calendar. Finviz, you think? That might be. The one that I'm most interested in is forward price earnings growth ratio. Benjamin Graham, Value Invest. See, why does TradingView not have like a freaking watch list? It does have a watch list somewhere in here, doesn't it? Here's a watch list. Share list, customized columns. You don't get very many columns. Elite. Wow. They've changed their website up a lot since last I looked at it. Holy cow. Let's see, or am I don't know if I've ever even registered for this. Let me register for it. Oh, you can't sign up to with just log in with my Gmail. Okay, well. Okay. Yeah, see, Finviz does have a PEG ratio in their screener. But I don't necessarily want to screener. I want to already have picked them. Back tests, huh? $24 a month. Portfolio, maybe? Cool. Let's just add like the ones that I use. Or add tickers. Oh, add new portfolio. Test. Let's just call it that. Yes. Doesn't like that one. Well, let's add Microsoft. Okay, cool. So now, will it not actually let me change what is in the portfolio, huh? Maybe I don't really need to do it on like my portfolio. Maybe I just should use the screener. No, but like the way that I'm going about it is like looking at an industry, going through the industry, and then looking at the names that I'm most interested in that industry, and then looking at those metrics, and then using those metrics to determine like when to buy and sell and so forth. But this screen looks like it's built to just like, you know, like sim trade with it or something like that. The screener though, it lets you do the thing. I like that. So like fundamental, PEG, under 2. Let's see here. I want the I want the size of it to be, I want them to be relatively big ones. Market cap. They should be over mid. Right. How many do I get from that? 482. That's not bad. Those would be all like undervalued companies though. Probably not actually what I want to make. I think that I would have to say use price earnings growth as more of a filter. Like PEG should be under 3. You know, maybe some of these other things like debt to equity ratio should be under a certain amount and yada, yada, yada. Do these guys have a like a data platform? Because then the next thing is that I would want to oh, what's these tabs down at the bottom? Valuation. Okay. I wonder, that's weird what that, how that ordered it. Anyways, then I would want to go into Python and say like, okay, using these factors and everything, what would be, then do the back test. Do the back test and then like rebalance it at the end of every year or something like that. You know, somebody was saying something else. Benjamin Graham value invest. There's a website for that? Nah, I don't see that. I know there's, I probably need to go to the quant subreddit. So this is like a Quantopian sort of a thing, right? So for that, they went under. Maybe alpaca. I think I found what I want for futures data. Sort by how new. There we go. Fundamental Finance Data API. Oh, this is free. Free fundamental stock data API for your financial market analysis projects and applications. Get your own free key. Explore the documentation. Making a request. Ticker. Ah. But what you get back out doesn't very good. Okay, this is coming back down a little bit more aggressively here now. Still a ways to go till we're at the low, but we're definitely below the bulk of the volume now. Edgar, perhaps? Is that free? That's government. That's the government database, right? I think that would be a little bit more work than I want. Well, Reddit didn't really help me. I was kind of been keeping a little bit closer of an eye here in this area, but what it's kind of indicating to me right now is that there's not actually anything super serious going on. I think that there has been a seller out there that has probably been pretty happy. Somebody is selling in this, and there's plenty of liquidity and people to hit into, but what I'm just seeing there maybe suggests to me that they're done and that price is just going to continue to stick in this area for the next little while. Maybe after Europe closes, we get another big shift. Yeah, see another tick up. Part of it may be the dollar shifting around here, like, see the dollar kind of coming back down. I thought we would have another flush lower by now. Yeah, I'm not sure it's gonna happen, man. I think that my initial kind of reading on it was correct. Like, not that that was. So remember, I said, well, let me come back. We need this daily chart. That's what we need. I said, well, we're coming into a 200-day moving average, so there's probably some profit taking here, but that doesn't mean that they can't go lower. It wouldn't surprise me if that was the low of the day, but this is a situation where I think what you got is pretty bad, and it's at pretty key technical levels, so it could certainly keep going. But it really seems to me that it is that there was some profit taking here, and that's probably all there is today. If there is a move lower, it's probably not going to come until after Europe closes. So I can keep this one contract on to try and let it ride and try and swing it, and we'll see if I can get a better take profit than that 200-day moving average. So I might like royally screw this up, but this is the kind of practice that I need. So it's absolutely a situation where I think that they would be justified in moving lower. It's just, it seems like it's too key of a profit-taking level for them to do it at the moment. What was I doing? I was getting into something here. Oh, yes. 5 best stock market APIs in 2024 for data scientists. Bloomberg. Yeah, okay, thanks. Generous free tier with 20 years of historical data. Ooh, really? News and sentiments, huh? Fundamental data. That's what I want. No, it even has commodities. Um, oh, I can even do a query. I hate that they don't, when you go to them and their API doesn't give you a very good idea of what metrics they actually have. Zignite is probably the top one, but I think Alpha Vantage is like the first one that I would. So if I just hit one of these endpoints, well, that doesn't give me what I want. That's cool. Gives me a list of stocks and their IPO dates. The other thing that I need here is I need a data service that allows me to programmatically pull out upcoming news and past news. Because what I want to do is I want to have a list of, like, over the last 10 years, every major economic release, planned economic release, so that I can create algorithms that will avoid those areas and see if that changes any of the results in some of my things. Oh, here we go. Ooh, it does give it to me. So I think I can just do this with Alpha Vantage. You just ask for Bloomberg terminal with Python script, and yeah, Bloomberg definitely does it. Alpha Vantage might do it for us here. So here's the company overview that I gave. It does have a PEG ratio. Earnings per share, forward PE. EV to EBITDA and all of those sorts of things, beta. Like, I think that those are the most important things that I want. So I wonder here, if I do Alpha Vantage Excel plugin or something like that. Yes. It will automatically detect Excel. Maybe I should leave this one for tomorrow. I don't know. I'm having a hard time. I'm like really thirsty and need to pee at the same time. So I think I'm going to take a quick break. I think I might leave this for tomorrow. I'll take a quick break. We'll come back and watch the last 15 minutes of this. While I was gone, did you see a dog come in and steal stuff? I'm gonna have to go back and look because I think that dog stole that out of my room. I come over and his dog has something in its mouth. I'm like, no, that belongs over there. So that one of those alpacas. Okay, download Excel add-on. Now, I don't think that this API gives me, like, historical company fundamentals. So that would probably be the problem there, huh? But in terms of, like, having a sheet that I can look at every day to keep track of the stocks I'm interested in, I think this will get the job done. Looks like the S&P 500 is doing a little better now. Pretty much everything took a hit today, though. These guys are saying Tingo has it. I think that's what I want right there. Oh, hey. And they have a free tier that I think would give me what I want. Let's see if Tingo has an API or a Tingo Excel plugin. The open source Excel plugin. Da, 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 da. Java, MATLAB, Python, R. Yeah, that was perfect. That was perfect. Bingo it is, I think. I think that's where we're going. To do anything interesting? You know, I feel like oftentimes when we're getting close to the end, there's something interesting happening and we're watching, but it really looks like it's died down today, yeah? What should we name today's title? CPI spoils rally. Something like that. I think that their pricing here. So where do I get pricing? Fundamental data. Products. Fundamental data. Pricing. Well, there is some free. Did you catch the rally in MES? Oh, you mean from the lows here, from 65 up to 80? I guess 15 points isn't bad, is it? But I don't know. Rally isn't really the word I would use to describe that, right? I'd call it more of a pullback, right? I don't know. Okay, if we got all the way back to 5,025 by the end of it, that's a rally, right? But like if we're down and we come back up a little bit, but we're still down on the day, I don't call that a rally. That's a pullback. I didn't touch it. I tried to be as fast as I could. I tell you what, like let's pull up a chart here. Let's see how fast I am. Chart ZN, and we're gonna do it by second. We're gonna do a 1 second chart. Only 1 day's worth of data. Okay. Oh, and we can't do bars. And they need to be boxes. Okay. 1 second. And we're coming into the spots. So I got around 110. Let's call it 10. Just a round number to remember. Wait, when am I? Oh, okay. Yeah. So, I'm not that fast. There was like, if I had clicked it within the first few seconds, but there's no way that you would have gotten filled on those. So now, let's go back and do it like, beta series tick. And do like a 1 tick on a box, or maybe we'll do line on what do they call them? Maybe open close. Okay, there you go. So now you can see how it went. We'll add vol here. And let's change it. It's not open close. It's like, what is the one that kind of gives you the little... Yeah, maybe it's just that one. Maybe that's what we want. Okay. So when I look at that, there does look like there actually would have been an opportunity for me to have gotten filled at 16, actually. In like the super, super tight area. But the 09 wasn't terrible, actually. Actually, where was my first order? 05. 5 seconds, huh? Oh yeah, so I was right in here. Somewhere in here. Went a little bit against me, but it was probably about the best I could have expected, I guess. I feel so frustrated talking to you. That's the way I am. It's probably not a good trait to have in a streamer, is it? But it's a good trait to have in a trader. How long has that pullback been going for, too? It's been about 30 minutes. That's not bad. So thinking back on this trade, I think that the entry was acceptable. If I could have gotten 16, that would have been amazing. I was not fast enough for 16. I can't expect myself to be getting that. But on the downside here, I took one contract off at 0.15. And I probably could have let that ride a little bit further. So that the exits could be worked on a little bit here. You know, when I did that, I just was kind of like, okay, it's definitely gone here a little bit, and I'm already making 501 on, so I started taking them off. So I don't think that in a situation like that, that I have a well thought out enough plan about how and where to take my profits. I definitely want to have some contracts where I take them off quickly and reduce my risk, but I definitely could have let those ride further, so I don't know how to quite deal with that. Found a good deal on a rack mount UPS, but I don't want to travel as far as it is at. It's down in American Fork, and I don't know if I want to travel 30 minutes to go and get it. I noticed one of my little notifications on my email went off and showed me that. Okay, but what I was really looking for was Tingo activation. Yes. Dun, 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 dun. Cool. There's 3. Okay, so how am I going to do this? I'm going to open all of them up and see what we got. So this one is from a website. This one. Oh, why would it not? Sure. Oh. I must have left it in the other room. Well, that's okay. I can do this another time. Maybe I'll have something ready to show you guys tomorrow. But in the meantime, it really does look like the treasuries have died down. Oh, actually, no, I take that back. They've dropped down a few ticks again. I'm still seeing selling. We are now at a negative 100K. So 60,000 contracts. That's good. Or that was about like my prediction, wasn't it? Because I was like, oh, we did 30. And I think that we could probably do another 30 to 40. So now you're to 60, 70. Now, throughout the day, it could be a lot more than that. But I think I had a pretty good handle on today's action. That makes me feel a lot more confident about my trading. So now the only problem is that the micro treasury yield futures were not tradable until long after the event. So I don't know if I really could have capitalized on that with my live account. So I'll have to think about that a little bit more. Would like to, well, no, I don't think so, because in a situation like that, even with one contract, I could lose like $500. I don't know. I'd really want to switch over to trading the ZN live in those situations. Well, anyways, I'm going to see you guys tomorrow. In the meantime, stay